And I'm going to talk, as I was asked to do, about private digital currencies and Libra. So I think it's best really to start, and I've got 14 quick slides, so I'm going to be doing this quickly. But start really with the payment system's pain points. And this is not an exhaustive list, but we all know the cost. About 0.5% to 1% of GDP in most countries. That's $100 billion to $200 billion in the US. We just heard it was $16 billion in Canada. But those are real dollars. Settlement risk, chargebacks, fraud, data privacy. And I would say this, which I didn't put on the list, we in the last 30 or 40 years in the official sector has layered over the payment systems that have existed for centuries. We layered over it all of this stuff about guarding against illicit activity. And we sort of take that for granted, but that's a very big shift in the last 40 years, that we say that the payment systems also have to sort of have a policing function and an enforcement function. We layered over it, at least in the US, sanctions, where we have sanctions against at least a dozen countries in one way or another. So there's some pain points that are happening that are very real. So what's happened a bit? Well, we have big fintech companies, we have big tech companies, and we have the unicorns. So just as Rod was saying and others on the panel, we really do have a lot of competition coming from different places. And so before we get to Libra, or China's central bank digital currency, we have to think about this is a very rapidly changing space. Used to be sort of back office and boring. It's not back office and boring anymore, or, well, maybe to a geeky guy like me. And if you're attending this conference, probably not to you either. So in the midst of this, does anybody know who Satoshi Nakamoto is, though? Darn. All right. So Nakamoto-san came along, and look, on a cypherpunk mailing list, literally cypherpunk mailing lists that have been around for about 20 plus years, puts this out and says, I'm going to, new electronic cash system that's fully peer-to-peer. By the way, Nakamoto-san never used the term blockchain technology in the 8-page paper, but it was about payments. And what Nakamoto-san was trying to do is address payments. Well, here's the modern payment system a la Gary Gensler. I mean, I kind of think about it, but from a consumer to a merchant, we got a lot of stuff in the middle. That's the 0.5% to the percent, and kind of the question comes, can cryptocurrency kind of just go right across the bottom here and somehow disintermediate, as we say, or just bring efficiency, or somehow get into it? And I put all the wallets on the top. Some of the wallets actually use all of the gunk in the middle. I'm sorry, not to be professional. I am a professor of the practice. I don't have to kind of quite do it quite as academically. And I'm proud to be at MIT. They're taking an experiment on me. But all of the wallets as well could try in their own ways to sort of disintermediate some of that in the middle. So it's in that context, and I think you can't throw out also all the payment tokens. Now, Bitcoin's the big one. I call these payment tokens, but what they really are in many ways are only doing one of the three roles of money. And Rod, again, I keep quoting, talked about sort of this disintermediation of the three roles of money, or disaggregation. These are really more or less speculative stores of value. They're not much of a medium of exchange, and they really are not unit of account, except if you're doing an initial coin offering, you could price an initial coin offering in Bitcoin or Ethereum. But they're not a bad digital store of value, speculative store of value. Gold, $8 trillion. This stuff, about $200 billion. So 2.5% of the value of gold. And so a lot of people sort of say, if you're a family office, maybe put a little bit of money in this because it's a bet that it will go to 4% of the value of gold. Or it could go to 0% of the value of gold, of course. So then we get to the messaging companies. And all the big tech companies, by and large, in one way or the other, if they're in messaging, want to be in payments. They want to add payments on top of all the other activities. And it's not just in China, in the US, it's in Korea, it's in Japan, it's in Africa, of course. M-Pesa is Safaricom's answer to the payment system. But Facebook Libra comes along. I'd watch Telegram very closely. It has 380 million users. It's an encrypted messaging service. And Gram is the token that they're doing there. But it's also in the wholesale payment space. And if you're with central banks, you know that these wholesale payment systems have a lot of pain points as well. So what are the pain points people are trying to get to? Both retail and wholesale. I'm sure blurring both the retail and wholesale side, extending settlement cycles to 24/7. Now, we in the US are behind. 18 or 19 countries purportedly have real-time or instantaneous 24/7 payment systems. We in the US, we have a sort of a new private system from the clearinghouse, but the Fed is going to do Fed now, maybe by 2023, maybe it's 2025. And I applaud Lael and the gang there and everybody doing it, but we're behind. Let's face it, the US payment system is behind. But it's not just that, it's trying to do something peer-to-peer that might disintermediate. But when I see JP Morgan with a network of dozens of banks with this JP Morgan coin, and I see Fnality, which was the utility settlement coin thing, and the wholesale side, I go, there's something real happening here. It's not just a bunch of fluff and speculation in Bitcoin. There are pain points and real pain points. So what's Libra trying to do? Well, I quote them at the top. The goal of Libra is to have a new global currency for billions of people. There is nothing that lacks ambition in this. Let's just face it. And with all respect to Mark Zuckerberg, who I've never met in my life, or Sheryl Sandberg, with whom I worked at the US Department of Treasury 20 years ago, if I would have been them, I would have said to David Marcus and the team, please come back and scale your ambition down. And I'm speaking as much as a political actor as a financial actor. I'm just saying there are needs, as Andreas said, was it Nigeria, that there's maybe a desire for something like this, more than in the US, but they were saying billions of people, new global currency. So what is it? There's a reserve. The reserve will basically be, in my opinion, an asset management company invested in 4 underlying currencies: dollar, yen, euro, and sterling. Maybe later it would be more, and it would be in bank account money and government bonds. Now, they might be brushed back. They might negotiate that it's only in bank account money. That might be the path they're going on, that they can't invest in government bonds as well, but their initial thing was they would invest in both. They'd pay no interest on this payment token, but there would be another piece of it, a Libra investment token that I'm sorry is down on the bottom, called LIT. So there's actually 2 tokens. Guess who gets the float? Anybody want to guess who gets the float? The members of the Libra Association. And the Libra Association was 28 members. It's now 21. A bunch of the payment companies sort of said, we won't be part of it. But amongst the 21 companies that are still in there are a couple venture capitalists, Union Square Ventures, Andreas Horowitz. You better believe when they did their analysis, they were doing an analysis on the option value. If this thing takes off, we can earn a lot of float. That's just economics. It does use a blockchain technology. It's a permission blockchain technology. They have about 250 people. They're good technologists built on something called Tendermint and other things. It's kind of interesting, but it's still a closed permission authority system. They'll put some smart contracting language. Why is this important? They want to do programmable money. And that's sort of what central banks' money. Central banks aren't doing this, but central bank money in a digital way can be programmed. The Libra Association I talked about. Then there's a wallet, Calibra. But they're also saying this is an open wallet system. Anybody else can build a wallet. And the official sector gets a little antsy about that because where's the know your customer, KYC, sort of anti-illicit activity side of this. Facebook has tried before 3 times unsuccessfully, and earlier this week, because Facebook knew this conference was happening, they announced, Philadelphia Fed, They announced on Tuesday a new Facebook Pay. Why do I say this? They basically have stubbed their toe a number of times. Alipay, WeChat Pay have beat them. Amazon Prime has 100 million customers. And yes, Apple Pay or Apple credit card stubbed their toe with Goldman Sachs in the last couple of weeks too, in terms of how they allocate credit and the use of machine learning, which I advise anybody to take a look at if you haven't recently. But Facebook wants to get into this payment system. So the policy issues. I slice them into the agencies or buckets. It's not just central banking. For central banks, how are these investments going to go? The People's Bank of China said to Alipay and WeChat Pay over a 2-year period, we have to lock this down more. And as you may know, as of June of this year, the People's Bank of China said that all of the balances, the store value, are 100% in M0. They're directly in central bank money. That was not what it was 3 years ago. Over in Kenya, Safaricom has to take those funds. They have to be like a narrow bank and 100% put in commercial bank money. Little different approach, but it's still 100% commercial bank money. In China, over 2 years, it got to 100% M0. How's this going to play out? Really important. Are these really securities or investment contracts of some sort? Facebook wants to avoid that. They do not want to come under the Investment Company Act of 1940 in this country or elsewhere. I think it is an investment contract because there's 2 tokens. There's also somebody getting the float, the Libra investment token, on top of the Libra token. I also think because it's multi-currency, there's some currency risk. You can't get away from that. But on the other hand, maybe they have some lawyers that will sort of sort through that and not be there. Financial crimes. How do you embed know your customer and anti-illicit activity into all the competitive wallets? And if you can technologically put it right in the base code. You could put it in a permission system, a certificate authority, a digital ID authority right in the base code, but it will probably limit the adoption. So that's a financial trade-off. And I put, of course, data protection and competition authority. These are really important questions. I think one question outside of large countries like the US and Canada and the European area and China, for smaller countries, they have to say, what will this do if somebody wants to start using something other than our currency? Adoption of this might be the highest, if it ever takes off at all, in sub-Saharan Africa and Latin America and smaller countries, and somebody might want to liberalize instead of dollarize. That might be for political reasons, not just for economic reasons. We don't want to be in that US zone and SWIFT and et cetera, et cetera. So now it takes us to a close on China's digital currency electronic payment project. This chart done by Binance, which is a large crypto exchange, was done 2 or 3 months ago. And China was saying this is going to be second-tier money, tier 2 money, or it's going to be distributed through the commercial banks. Well, I think it is correct that it's going to be distributed through the commercial banks. But the question is right down here, is this a liability of the commercial banks, or is it a liability of the central bank? And in the last few days, with the help of some students of mine at MIT who have translated a bunch of Chinese for me, it looks like this is M0. It hasn't been rolled out yet. We don't quite know, but it looks like it's going to be M0. It's going to be central bank liabilities. And that individuals can actually circulate it to folks who don't have bank accounts. Now, Alipay and WeChat Pay over the last 2 years transitioned to a form of a synthetic central bank money. In fact, you might say that China already has a synthetic central bank digital currency with the Alipay and WeChat Pay wallets in a form. And it might be that the People's Bank of China was just reacting to that and saying, we'll take the competitive risk that we might disintermediate commercial banks a bit, but we've got to address ourselves, and Rod and I have had some lively conversations. This might be actually the central bank getting more control rather than less control. I think this inspired by a whole bunch of things happening in Facebook, a whole bunch of things happening in fintech, a whole bunch of pain points, is mostly inspired by Alipay and WeChat Pay. But this is probably going to, any of you that are maximalist on central bank digital currencies, this will address the system. In February this year, I had the honor to speak at the Financial Stability Board's, one of their panels of the 20 countries and so forth. And I included a chart, and my closing slide said, some country will have central bank digital currency. There was discomfort in the room. I was provocative in that room in February of this year when I said, and I got brushback from a lot of countries, senior ministers, saying, why? I said, partly there's 200 countries. Come on. It's not a hard prediction. I mean, really, really. But then I went through my logic, and you heard the panelist here go through the logic. This was in February. I will admit, I didn't foresee in February it would go this fast. And I didn't really foresee that it would be China that would kind of stir this up a little bit. Now, it's a bit of a hybrid. It will be distributed through it's not out there yet. It is China, so it'll be probably highly controlled. There'll be some ambiguity. It's not on a blockchain, by the way. Mark Carney's speech, can't help it. I like Mark. Wonderful job in Canada, and you lost him for 7 years. You'll get him back. He'll do something. But Mark kind of stirred things up at Jackson Hole when he said, you know, this US dollar thing, it's maybe a little bit too dominant and everything. These are some of the statistics. Growing dominant currency pricing. If you haven't read his speech, he's got some really good things in there that are about R and so forth. But then he coins his phrase, I think it was his phrase, synthetic hegemonic currency. Maybe it shouldn't be Facebook, but maybe we should have a competitor to the US. You know, like a synthetic special drawing right and everything. So this is really where we are at. Things are happening fast, big tech's there, we're all there. I'm going to disagree with one person on the panel. I think it was Kevin, I'm sorry, Kevin Warback said, you know, he can see pretty near that we'll be in a digital financial age. I think we're already there. So sorry, Kevin, we're already there. Now, our children, or my grandchildren, sorry, but I say to students that the students' children will not recognize physical cash except for a novelty. It'll be like when my parents handed me a gold coin. I said, what's that? No, I didn't know what a gold coin was. My grandchildren will not know what physical cash is. We already live. The technology is rapidly changing. Payment systems have many pain points, as I said. Watch out for big tech, startups, big financial, and central banks. There's four kind of. Now, merchants are also playing something in the open banking system. So I could have added that to the slide as well. Crypto does provide a peer-to-peer alternative. You can't be a pure maximalist. I disagree with Nouriel Roubini from time to time, and I've had these debates with a friend, Joe Stiglitz. You can't count this stuff out completely. And you see the rest. Facebook is trying to do something, but they've tried before. I'm not sure they'll be successful, but it's innovative. It's interesting. I give them a credit, but they're trying to launch it when trust in Facebook is in such short supply. And finance is fundamentally about trust, so that's kind of a awkwardness for them. And I just think that a lot's going to keep changing. I think that we're in an uncertain time. But just from from February to this year, central banks are kind of saying, my God, this is kind of happening. So those are my thoughts. I don't know if there's a minute or two for any questions, but I'm glad to do whatever the organizers want me to do. Where do we go?
Can you take one question?
Sure, whatever you want.
Short, quick question. No.
Shoot, I can hear you.
Can you hear me?
Yeah.
Yeah, so talking about central bank digital currency, so compared to the last dramatic change in central bank currency, which is the unpegging of the US dollar away from the gold. So how dramatic or significant of this change now?
It's a great question to which I want to think more about after this conference. I think it's dramatic for different reasons. So it's whatever standards we had, gold standards or other standards, were in some ways fundamentally pegging towards the value of currency. The value vis-a-vis, we have 180 worldwide currencies right now. The value sort of cross-border. And I think it was, as you say, very dramatic change when we went to more market-based pricing and so forth. I think this is very dramatic for a different set of reasons. I think it will change over time, potentially, the conception of commercial banking, and that it could shift commercial bank funding models and how they fund themselves. It could shift a lot of things in the payment rails, and if we disaggregate a little bit, the medium of exchange from store value. So I think it's transformative, but in a different way. But it's a great question, and one that I want to think more about as to whether, maybe I'm wrong about my first assumption. I don't think it's transformative in the ways that moving away from a worldwide sort of underlying standard of stable monetary pricing. But maybe Tim has a point of view as a central banker, whether you think this actually could transform how we value currencies as opposed to the mechanisms and means. I do think it could shift commercial banking, though. I did something not on the program. I caught on a former panelist.
Okay. Yeah, I mean, certainly when you think of the possibility of currencies that that are created through various private mechanisms, I mean, it could change the way that the value of money is defined, and that's. I mean, that goes to a bit of the point Rod Garrett made, that the fundamental aspect of the central bank's role here is the unit of account, and everything else builds on that. And so, in a sense, that I think the concern would be, well, if that link is lost, then you wouldn't have the degree of confidence in the stability of the purchasing power of whatever currency is being used. But anyway, that's.
I do think that, I mean, I think the US dollar will be a dominant world currency for quite some time. We have tremendous advantages here in the US because of our capital markets. I mean, we are an enormously resilient country as well, but our capital markets, our legal system, the size of our economy. But I think that this whole digital shift means that if there was a shift from the US dollar to another currency, decades from now, I don't see this in the 2020s, but decades from now, it could happen faster. It's digitized, smart contractized, the inflection point could happen faster when it happens than when you say the British pound sterling moved to the US dollar roughly 100 years ago.